The Dow closed up for the fourth consecutive day, its longest winning streak in almost a month, while the S&P tech sector closed at a record today. Tom Lee, head of research at Fundstrat Global Advisors, is now joining us. He contributes to CNBC as well. Thank you for being here, Tom, and happy holidays. I noticed in the producer's notes that you think animal spirits will return next year, so I would like to ask you a question about that. Which animal species return, and did they hibernate this year? Because in 2024, we witnessed some species in full force. Which ones do you believe will be most prevalent in 2025? Considering what animal spirits are, and this is a reference to Milton Friedman, the ISM has been below 50 for nearly 3 years, indicating that businesses have been cautious. Although they haven't been very visible, the Fed is finally making cuts, and the new administration is thought to be quite business-friendly. Therefore, I believe that businesses will be expanding and feel comfortable completing mergers for the first time in a long time. This, in my opinion, is a very favorable environment for financials, small and mid-cap stocks, and cyclicals in general, such as industrials. Therefore, even though technology is keeping up with the business, I believe that in 2025 the market will feel like it is expanding. Although I am aware that you are a classic optimist, Tom, I would like to hear where you believe the greatest threats to that prediction for the upcoming year lie. The main question in 2025 will be whether or if there is a policy error, and there are two possible reasons for this. One would be the implementation of economic damaging tariffs by the incoming administration, which we know would have immediate repercussions, or mass deportations that have an unidentified effect on labor markets. The other reason is that the Fed may shift from attempting to sustain the economy to attempting to salvage it if it gets overly focused on inflation and permits the labor market to deteriorate. That, in my opinion, would be a really negative development. Tom, considering the focus of the incoming Trump administration, one of the major themes we really wanted to draw attention to both viewers and listeners was the notion that cryptocurrencies will continue to be a topic of discussion. We are aware of your optimism over a number of cryptocurrency-related topics, but I was wondering if you could explain to us which areas of the market you believe would experience the greatest relative performance in 2025. For the past 8.5 years, investors have been advised by our firm to allocate funds to cryptocurrency, such as Bitcoin and Ethereum. Given that the regulatory environment is actually getting more benevolent, that allocation should likely be far higher in 2025. Therefore, I believe that Bitcoin still has to be in the center of someone's holdings, and I predict that it will reach about $250,000. However, that would enable Ethereum, which is currently trading at about $3,500, to likely perform even better. Ethereum might reach $5,000 or $6,000 in the upcoming year, right? In addition, I believe that this year will likely be the alt season, when altcoins like Solana perform exceptionally well. What kinds of businesses would profit the most from that cryptocurrency expansion, if it were to hypothetically occur, Tom, if you believe, and this is merely a relative opinion, that Bitcoin is a commodity, and that some of the businesses that use those commodities could also be involved, similar to gold and gold miners? Well, we have learned things from 2024. The best performing stocks that are associated with Bitcoin are what we would refer to as leveraged stories to Bitcoin, which means that they are either buying Bitcoin as a treasury asset or are leveraged to the price of Bitcoin. These stocks have performed quite well, and it would include companies like Coinbase, Silvergate, and MicroStrategy. Other businesses, like as NVIDIA, are essentially following what Michael Saylor would refer to as the Bitcoin standard. If an investor is particularly focused on large-cap stocks, however, I would think that a company like MicroStrategy provides excellent exposure to Bitcoin. One of the top performers was Nvidia. Late in December, Morgan Stanley released a statement stating that it remained appealing to major AI drivers. Nvidia was still their first choice, even though they devalued some of the other names. Let's hear about a trade you discovered that shows optimism for Nvidia. Yes, Nickel, thank you. Nickel, we usually see really large volumes in Nvidia every day. Millions of contracts use the options market every day, and people are positioning themselves. Today is no different. The shares experience such decline in early to mid-December. With a decline of more than 10%, it was in correction territory. As we approach the holidays, it has made some progress. And I believe that's one of the main points of contention here. It's possible that some people were selling their shares, but the derivatives and options market is still booming right now. And it's anticipated that by 2025, the Magnificent Seven, the major tech companies that had pushed into and against Nvidia, will be rotating out. On a daily basis, we observe it in the option flows. A put-call ratio below 7 indicates that there are only roughly 7 calls trading for every put that is trading, which is characteristic of bullish activity in a company like Nvidia. Even though the shares were in correction zone in December, nobody is truly downgrading them, so we're still seeing some price target raises. And as the January monthly expiry approaches, I believe that options traders are positioning themselves for some significant gains. Because, as we have discussed numerous times, more than 20,000 of the calls from the January 140 strikeout were picked up today at an average debit of roughly $4. They were paying a little over $4 for these yesterday as well, but they are accumulating a sizable open interest position on the 140 strike in the hopes that it will return to that level. By spending $4 on this, traders anticipate that the stock will rise above $144 during the course of the next 3 to 4 weeks. That's just approximately 8% to 7% higher than the share price right now, which is between $130 and $132. You must therefore have that in mind. However, whenever we see drawdowns in names like Nvidia, especially those that consistently rank among the top 3 options volumes each day, the options traders typically take the lead over the stock traders in a name like this, expecting that, hey, I'm giving myself duration on this, since each option is limited, isn't it? An expiration date has been set. Therefore, January 140 calls are one to keep an eye on as they build up a sizable open interest position on that strike, which expires on January 17. Yes, it's rather fascinating. And, as I indicated, Morgan Stanley was the top pick when we saw some of the price activity, and I believe their price objective at the time was $166. Furthermore, it is unclear how much room there is for expansion for the Blackwell chip. It seemed like it was just getting started, really. That's that group then. Overall, semiconductors were undoubtedly the best performing group. We'll give it to Apple as well, as seen by the new iPhones and Apple Intelligence. On Apple, you discovered a bullish trade. Yes, this is exactly the same configuration at Apple. One of the most important things to keep an eye on with Apple, in my opinion, is that, as you can see from the chart above, it has risen more than 30% this year as of the end of December and reached all-time highs this month as well. That is something you must consider. The PE ratio on this one, however, is something I believe many are ignoring. On a valuation perspective, it is being stretched because it is at all-time highs over the 40 level. Since everyone believes that we are about to enter a multi-quarter supercycle, I don't think anyone is concerned about that at the moment. I am aware that guests have frequently discussed a supercycle that was set to begin in September when the new iPhone 16s went on sale on the network. However, it hasn't come to pass, and the AI and Apple Intelligence products that were integrated into iOS are only now beginning to be released. More will be available in 2025. Therefore, I believe that many of the actions that Apple is taking are not grounded in principles. Hey, there are 1.4 billion devices out there, and at least a percentage of them are going to have to be upgraded to the iPhone 16 and higher to get these Apple Intelligence features on those phones, is, I believe, the premise behind their excitement for the upcoming year. If you require any other changes, please let me know.